Yes, we have been around a long time, and also thanks to everyone in the audience for staying around for a long time before afternoon drinks. So we'll try and get you out of here on time. So look, I'm going to talk to you today about a unique opportunity in the Australian gold sector at our Blackridge project in central Queensland. We do have two other projects mentioned briefly, Commonwealth, which is immediately along trend from Alkane and their Boda discovery. We've yet to benefit like companies like Magmatic and Alice Queen from that discovery, but watch this space as we're just reviewing our porphyry copper potential. And in Broken Hill, we have the highest grades of platinum group metals in Australia, including, I have to say, the highest grade of osmium that our osmium specialist has ever seen. So just bear that in mind. And look, we're here for gold, but we have heard a lot of gloom and doom and where the world is going to go to hell in a handbasket. And, but as geologists, or my chairman likes to call us overpaid optimists, you always have to remain optimistic. And do not forget that the world is entering the most accelerating exponential change in technology that we've ever seen. It's unleashing a wave of innovation, new businesses, new ways of saving money, new ways of dealing with problems, which has absolutely counterbalancing some of the issues that we're seeing in the debt. And the biggest question that we all face as investors, if the crash does happen, when do we pull the trigger? And the only investment advice I can give you is that you should go to tradestops.com and look at their software. This is professional level portfolio management, risk management, for the price of $1,000 a year. It has amazing, scientifically calculated algorithms for buying and selling, shown in these colours here. They're not recommendations. It is an unbelievably back-tested piece of software that you should all have. In that case, you can invest safely and securely, knowing the knowledge that at some point you'll pull the stop loss when the crash happens. So 5 characteristics in our unique opportunity. We have large tonnages of free digging material. It's going to be very cheap to mine this material at our Blackridge project. We've demonstrated ourselves and from previous work that we've got extensive, coarse, low-grade gold with high-grade zones within it, all within 100 metres of surface. 98% plus of that gold is easily recoverable by simple gravity methods, which means that we can separate it using water or air. There's no need to build a chemical plant. There's no need for any tailings. It's a very unique situation that we've come across there. It does have its risk. We do not yet know the grade of the overall deposit, which I'll go into, but we've de-risked ourselves by just having signed a trial mining agreement, which will benefit from a royalty. A company's going to come to site at their own cost to start mining. They'll mine about 5% of the deposit, and if that works, we can take that over and start mining ourselves. We're also in a zone area with well-developed infrastructure, no native title issues. And so we have a significant opportunity here to develop and scale up a very low capital expenditure and very low operational expenditure deposit, offering an exceptional return on capital. And I have to say, limited downside. So when we show some of the figures of this, people do say, well, I can't believe it can be that cheap to mine these things. But this is a privately owned gold mine, only 5 kilometres from where we are in central Queensland, the Myclare field. These guys have set up for a capex of less than $1 million. It's a fairly simple water processing and gravity situation. Material is mined, put through this chute. It goes through a rotating trommel into a shaking unit here called an inverell jig, which captures coarse nuggets, and then the finer nuggets drop out into these yellow boxes here, which are these rotor sluices. Basically, water just spins the finer rock through here, and then the gold just drops out at the bottom of it. Now, this is not an alluvial show. This is weathered rock. It's an oxide ore with some exceptional processing characteristics. This is in the same unit that we're going to attempt to mine, 5 kilometres away. It's continuous between the two, and there's quite clearly a significant amount of gold there. So that's the fine gold, but really this is the cream. These are the sort of nuggets that we're hoping to find. This is from Myclare, just to be clear. It's about an ounce nugget in through there, and those are just coming out of the inverell jig that we talked about. But the big other breakthrough that this private company made was that they were digging down to a target horizon, which is this unit in through here. So these are sedimentary units, and I've been warned by Shay, of course, we have to keep things relatively simple. But these are conglomerates. They're laid down by river systems, in this case 200 million years ago. This is the target where most of the gold is, and most of the gold lies along this area here. It's called conglomerate-hosted gold. It's very similar to the deposits that were discovered in the Pilbara a couple of years ago, if you followed that gold rush. We were benefited from the tail end of that rush. This is the same concept, but different aged rocks, as simple as that. But as they were mining down to reach the target horizon, because in this region, and one of the reasons it hasn't been developed, the target zone is sort of between 10 and 30 metres below surface. It's buried. But as they were digging down, they discovered that a lot of this material, which they thought had no gold in it, actually was running quite low-grade gold, 0.1 to sort of 0.5 grams per tonne. It is low-grade, but you can actually mine and process it for about 0.1 grams per tonne. So what was waste is actually ore. You can mine it at a profit or at a break-even on your way down here. That's a massive breakthrough because it will allow you then to approach this as a bulk mining opportunity, whereas all the previous work in this area had just been narrow underground mines, mostly in the late 1800s. I won't dwell too much on impact minerals. We have been persistent. We have been around for quite a long time. We're just as enthusiastic today as the day that we started to try and find a big discovery. This is going to be a mechanism for us to, I think, to leverage ourselves. We have quite a number of shares on issue, but look, that's a reflection of the time, effort, and money we've spent looking for the big win. We have seen, of course, this big turnaround in the last 3 or 4 months. We've benefited from that as well. We have a very good register with 3 major groups holding 45%, including Andrew Forrest's private family company and 2 German groups. And over the years, we've received significant support from the German groups. So where are we? Blackridge. We're in central Queensland near Clermont, which is one of the big coal mining centres. It's the centre of the anti-Adani protest movement, and because this is they've only got 9 years of mine life left in through here, and the coal occurs in these little basins here, and the northernmost one in particular has the gold associated with it. It's probably produced about 300,000 ounces from this area of different types of gold, with about half or just over half of that coming from this Blackridge Myclare area, mostly in the late 1800s and early 1900s. It's been very poorly explored and ignored for 25 years because of the coarse, nuggety nature of gold. It is quite difficult to sample and accurately estimate how much gold is in these rocks. In the late 80s, there were about 75 vertical drill holes drilled into this area here. The main unit that we're looking at is this red line here, which is the contact between underlying rocks to the right and overlying rocks to the left. And that's shown in through here. And the main target horizon here is at the contact between those two. So here it's at surface, and this line of drill holes is 2 kilometres away, and the drill holes through here go down to between 50 metres and 100 metres below surface. And the same unit is still present at that depth and that distance away, with very good gold results in it, and indicating there's a sheet of gold here that's at least 2 kilometres by 1.2 kilometres in dimension, and it's only 100 metres maximum below surface. Interestingly enough, during this work, they discovered that some of these horizons in through here were also carrying gold, including quite a good result here, 2 metres at 12 grams. And that's very important because if we could develop an open pit in through here, having grades like this further up would really boost the potential of this deposit to grow quite significantly. And this is a technical thing here, but all the drill holes into this area are vertical. The gold is associated with faults like this, which are also nearly vertical, and so there's been no testing of these structures, which, as we've seen from most of the talks, are actually what hosts most of the high-grade gold. Just briefly, standing back a little bit, we've got about 100 square kilometres. About 30 square kilometres of that is potential prospective. We've purchased and got this ground for a total cost of $267,000. We have an option payment to pay, just so you're aware, November the 28th, and we do have money in the bank to pay for that. So what was mined at Blackridge in the late 1800s, early 1900s? It was nuggets. Any of you followed our story before? Apparently I'm a man who knows something about nuggets, but I'm not too sure if that's really true. But this is a sketch from a geological publication from 1905 by a geological survey of Queensland worker, Lionel Ball. And he sketched the bottom 2 metres. We've just coloured it in. And we can see that some of the grades, there's half an ounce in the first 50 centimetres, there's probably 3 or 4 grams sitting in here, another half an ounce. But along the basal contact here is where we're seeing sort of up to 10 ounces of material, and that's really what we're trying to find. Talking of the nuggets, then we can see that there are different shapes. So these are your classic sort of transported nuggets. You can see there are some little angular shapes here and there, but they've got these rounded edges. Generally, people would say, oh, these have been wind or water worn. But at Myclare and at Blackridge, where they've been found, this is that large nugget I showed previously. These are all very crystalline and have been deposited from fluids, hydrothermal fluids. And that's a very important distinction to make, because this is why it's been ignored. Most people in the last 30 years have taken quite an outdated exploration model, where the nuggets have generally been believed to have been eroded from the veins that you've heard about, get transported and dropped into river gutters in through here, and you explore for them by using vertical drill holes. Some of these types of nuggets, these are actually from the Pilbara. They've got these funny little edges in through here, indicating that they've been affected by wind as well as water, some of these, and they have a very different look to them compared to the others. However, a lot of work that's been done, again in the 80s and the early 90s on this deposit indicate that, in fact, rather than being that model, we've had fluid coming up from some sort of magma or volcano underneath here, and has been permeating out into these sedimentary units and depositing the gold. And you can see that conceptually then, it's a very different target and a very different thing to go and look for. As it turns out, in my office, there's a document written in ancient Egyptian. It's my PhD thesis, and we actually spent a significant portion of my life studying this type of deposit. So as a result, it's given us a head start in terms of looking for this style of deposit. And here's an example whereby we've got this gold sort of supposed nugget quite clearly deposited along this fracture, and that's quite crystalline gold in this conglomerate with big boulders and pebbles of material in it. So new concepts, new areas, and just to really sort of emphasise that, you can see there's some of this crystalline gold. Here's gold that's sort of got a bit of a rounded edge to it, and you thought, oh, are they transported or not? But right in here, if we look at this little nugget in through here, when you look inside, it's almost hollow, and it's got the same crystalline structure on the inside. So these are all large crystalline gold fragments that have been smoothed by various processes. So you can learn a lot by playing with your nuggets. Okay, what don't we know about this thing is that what is the grade? And this is the challenge of this style of deposit, and in fact any general deposit that's got coarse gold in it. And it's this thing called the Nugget effect. It's a mathematical feature. It's quite well known, but I've discovered over time better to describe it with a picture. If you have one 10-gram nugget in a ton of rock, you've got to mine the entire ton to find the 10-gram nugget. If you've got 10 1-gram nuggets, you can mine 100 kilos of it and mathematically extrapolate between them. So the answer is that the larger the nugget effect, the larger the sample you need to get an estimate of the grade. There's been no large samples taken at Blackridge prior to us being on site. It was one of the reasons we did the deal, because it's mining leases. We have 1 granted mining lease and 4 mining lease applications, which means that we can leapfrog into taking bulk samples and trial mining straight away, rather than many companies with this style of deposit on exploration licenses, and they're prohibited from taking large samples. Free digging, we're digging down quite easily to 5 or 6 metres below surface, just with an excavator, sticking it in the truck, and then putting it into some really high-tech equipment. This is a smaller version of the private thing. We're going to do our own reality show, Impact Minerals in Alaska, except we're in central Queensland. It just goes into the trommel, and the gold basically drops out the bottom and goes into this sluice in through here. And that sluice actually has a carpet in it. It's literally a carpet, and you get the carpet out and you rinse it off with a hose, and then you get an experienced man with a pan to pan it out. Amazing, amazing. And these are the results. Okay, now we've got free gold and nuggets coming out of this stuff nicely. And as an example, I mean, some of this material here, it's running, these are actually some of the better ones, but some of the smaller ones, we can recover 10 parts per billion out of this material with just water. which is worth 70 cents, just in case you're interested. But it's like, you can't describe how easy that is to get the gold out, and as a result, the cost of processing this material is going to be very small. So we've tested 1 kilometre of strike with that bulk sampling. Every sample's given us gold. There's large areas that are untested. This is the mining lease in through here. This is the area where it outcrops. These are shafts from the old timers, and we've got ounce dirt here that stretches over 1.5 kilometres down that dip. So if we can get onto these zones up through here, we have real potential to get a very profitable operation. Work done in the 80s, there's a non-JORC compliant resource here of about 50,000 ounces. We believe there's at least another 10 there, and you do the multiplication, and on this mining lease here, we've got quite a bit more resources than Matza. All layers are within 100 metres of the surface, and we should be able to mine it for about the same cost as Kirkland Lake. So it's an exceptional deposit. So our next steps, we've just signed the trial mining. It'll probably cost about $1 million to get this operation going. It's money we didn't want to spend. It is still very high risk, I should emphasise that. But we should know very quickly whether or not it's going to hang together financially once the trial mining starts. We're looking to try to get on site before Christmas. I hope we can. And we're going to throw some very novel technology at this in terms of air processing. You've seen water so far. We're going to put a dry processing machine in through here, which can do 500,000 tonnes a year at least. And if that works, the cut-off grade will drop even lower, and the margins that we'll have on the gold that we get will be quite considerable. So we'd then look to scale production up to hopefully to see if we can get to 50,000 ounces, but that 50,000 ounces would be worth 100,000 or 150,000 ounces for most standard producers, because our cost of exploration and production will be very low. That's the Impact story. If you want to learn about Impact or the TradeStop software, I'll be on the booth, and we look forward to any questions you have. Enjoy your afternoon tea. Thank you.